As per single entry system, okay, before going to problematics of single entry system, we should you should learn that is statement of affairs. Statement of affairs as on so and so date. In this statement of affairs, the contents are that is liabilities and assets. Liabilities and assets, same as normal balance sheet only. So whatever the liabilities, you should be write on the liability side, and is there any assets? Okay, you can write assets side. But whatever is the main basic, that is the basic information of the our basic information is available in the business. Okay, that is only the values we should be recorded. Even single entry system, we should be prepared creditors account and debtors account, and which asset we have still up to that period. Okay, so and so information is available even if it is a single entry system is earlier followed by the proprietors. Okay, with the help of that is the information, we should prepare statement of affairs. Okay, that is the statement of affairs we should be prepared for the purpose of compute capitals, either it is opening capital, okay, or closing capital. So that is the reason we should be compute it. And but it is not prepared on any systematic basis. It is not prepared any systematic basis, and it is only estimate of the financial position. Okay, it is not accurate and or reliable. Okay, it is a estimation of the capital only. Okay, it is with the expected, that is expected values and estimated values, whatever it is in information is available in the business. With that information, we should be prepared statement of affairs. But that is the values is not an accurate. Okay, but not an accurate or reliable. So even if it is, even we should be prepared compute statement of affairs and compute the capitals. And this is the statement of affairs for the preparation of that is to know the preparation for the purpose of to know the financial position and to find out capital, capital. Okay, this is the capital for the computation of this capital for the computation of profit or loss, to know the profit or loss. Okay, for this is the purpose. Okay, we should be prepared. And how to compute profit means, that is a opening capital, and after that is the drawings and additional capital introduced, and less closing capital. Okay, with this information we should be that is the difference of opening and closing capitals. The difference is profit or loss. Okay, that is only the main purpose. Okay, we should be prepared financial, that is a statement of affairs. Okay, and so the balance sheet, finally the balance sheet contains, it is first of all it is capital. After capital there is somewhat other liabilities, that is the loans taken from banks and so and so financial institutions. Okay, and bank OD, and bills payable, outstanding expenses, and income received in advance, in advance okay, and is there any loans from any financial institutions and so on and so on. Okay, and creditors also very important. Creditors, okay, these are only the liability side items. And if we come to assets, okay, the first one we should be write fixed assets. Fixed assets, the fixed assets is maybe land and building, furniture, okay, and motor car vehicles, and somewhat goodwills, that is intangible assets. Okay, even if it is intangible asset, the goodwill is comes under fixed asset only. Okay, goodwill, patent, copyrights, trademarks, okay, that all those ones is comes under the fixed assets only. Okay, and after that is fixed assets. After writing fixed assets, and there is a another asset, that is current assets, but here there is no need to classify that assets. And in this, cash in hand, cash at bank, there is a bank balance, and investments and trade receivables. Next, that is a closing stock, of inventory. Next, furniture, machinery, patent, goodwill is covered under fixed assets. Next, debtors. Next, bills receivable. So if it is a liability side, it's bills payable. If you come to assets, it is bills receivable. Okay, so examples of these are only the items we should be write under. Okay, so asset side. So finally we should be compute, and the balancing figure in this one is called as capital. Okay, that is only the statement of affairs. This is the statement of affairs, is computation of to know the financial position and find out the capitals and profit or loss with a deduction opening capital minus closing capital, which is indicates which is the result is profit or loss. Like this we can compute the profit under single entry system. Okay, this is the statement of affairs full of information. And after that, okay, how to compute the profit. Okay, how to compute the profit. So before computation of the profit, you should know, so maximum we should write capital at the end, capital at the end of the year. I can write again neatly, okay, but for example it is. And for this we should add drawings. Okay, so why should add these drawings? Actually, every time in financial accounting you should deduct the drawings from capital, but why you here add drawings? Okay, added drawings. Okay, that is only the question mark here. Okay, that is a main reason is, okay, this should be clear in your mind. Okay, this is the main important point, it should be clear in your mind. Okay, so that is because of, okay, why should add means drawings. Actually in first year, that is a financial accounting, okay, financial accounting, that is capital, that is opening capital. Next, less drawings. Okay, then you will get somewhat amount. Next, add net profit. And is there any additional capital? Okay, this is only the one you did in the first year. Okay, you did in the first year. Finally, the result is closing capital. So here we added deduct the drawings from opening capital, but the same one is add to drawings. Why means, okay, final one it is closing capital. Okay, for example, so 10 minus 3 equal to 7. 10 minus 3 equal to 7. If you want this is a if you want this 10 rupees, then this 7 plus 3 equal to 10, means whatever it is a minus value, if it is goes to out of equal, it becomes a plus. Okay, that is 10 equal to 7 plus 3. 10 equal to 7 plus 3. Okay, so as per this equation and minus, if it goes to out of equal, it becomes a plus value. So like that only here, actually in this for computation of profit or loss, we should start with end of the capital, means this is a closing capital, this closing capital. Okay, if you want to, okay, if you get the net profit, you should add drawings to closing capital. Okay, whatever the minus value, it becomes a plus, and the plus values is becomes a minus, okay, to closing capital. Okay, so whatever here it is minus deducted values, you should add to closing capital. Add to closing capital. Whatever is the addition values to the opening capital, then deduct from closing capital. Okay, because of like this one, its plus becomes a minus and minus becomes a plus. Okay, so that is only the main reason, that is only the purpose of we should add capital at the end of the year, we should add drawings. Okay, now we can prepare the, that is the profit or loss, computation of profit or loss statement pro forma. So this is only the pro forma of statement showing profit or loss for the year ended, okay, so and so period, end of the year. Okay, this should be end of the year. In this, okay, profit or loss statement, we should be start with this capital, that is a closing capital. Okay, closing capital, or you can write capital at the end, no problem, closing capital. Okay, we should be started with closing capital. With this closing capital, we should add drawings. Okay, for closing capital, end of the capital, we should add drawings. If it is opening capital, deduct the drawings. Okay, then you will get somewhat amount, and less additional capital. That is the capital introduced between the year. So whatever is the value, you should be deduct from, okay, that value, then you will get somewhat amount. Okay, after deducting additional capital, then that is the value is called as this additional capital is also called as further capital introduced. After further capital introduced, whatever the value is called as adjusted capital. At the end of the year. Okay, at end of the year. Okay, after adjusted capital less opening capital. Okay, somewhat amount, okay, so you should be deducted, that is amount, then you will get somewhat amount, that is called as, it is profit before adjustments. This is the profit before adjustments is, okay, profit before adjustments is before adjustments of the profit. Okay, and now you can uh, if it is a plus value, it is profit. If it is a minus, it is a loss. Okay, and after the whatever is the value, then adjustments, you can adjustments. Okay, so that is adjustments is either it is incomes or expenses. Okay, so whatever the expenses items, okay, whatever the expenditure items, we should be deduct from profit before adjustments. Okay, is there any income items, means whatever the profit and loss account credited items, we should be add to a profit before adjustments value. Okay, so if it is a profit and loss account debit values, okay, which value is increased profit and loss account debit side, that is the value we should be deduct from profit before adjustments. Okay, that is a simple one you should be remember. For example, provision for bad debt, provision for bad and doubtful debts. Okay, and after that bad debts. Okay, next one, discount on debtors, that is provision for discount on debtors. Okay, next depreciation, this is also adjustments in depreciation on fixed assets. Okay, that is fixed assets mean land and building, furniture, motor car, vehicles, and so on and so on. And after that, interest on loan, okay, that is a interest on loan, interest due on loan, that's okay, better to write interest, that is outstanding interest on loan. Okay, or interest due on loan. Okay, both are same. Next, interest on proprietor's capital, interest on proprietor's capital. Interest on proprietor's capital. And after that, is there any amount due to proprietor's salary? Okay, that is proprietor's salary payable, and is there any outstanding expenses? Okay, and income received in advance, so income received in advance. Okay, these all those values we should be deduct from profit before adjustments. Okay, once these all are negative items, once, okay, at a time you can total it and deduct from profit before adjustment, then you will get somewhat amount. From this value you can add, that is whatever which is related to credited to profit and loss account, means which is the credit amount is going to be increased. Okay, that is the values you should be add to profit before adjustments. That is example, accrued income, next one, appreciation, appreciation on assets. Appreciation on assets. Okay, is there any machinery or building values, if it is going to be increased? Is there any land value is going to be increased? Okay, then that is appreciation on fixed assets. Okay, and after that, provision for discount on debtors. Okay, these are only the maximum additional items. Okay, we can add to, that is the profit before adjustments. Okay, then if it is a value is positive, then it is profit. Okay, if the value is after addition of these values, okay, that is okay, whatever is the final amount, if it is in the plus value, it is then it is profit. If it is a negative value, it is loss. Okay, profit or loss for the year. Like this we can compute, okay, profit or loss statement for the, okay, for the year. Okay, this is only the